This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel and it is finally Friday. Today I want to talk a little bit about Fed interest rates because there's some interesting developments there. I got a couple of Bitcoin charts as always, and then we're going to run through the charts and see if we can actually find some half cycle lows today. So I'll show you all of that as we head into the weekend. Of course, there'll be a weekend's deep dive tomorrow. Also, I'm recording a collab this afternoon, so I'm very much looking forward to that. That will probably be out Monday or Tuesday, so stay tuned for that. It'll be a new guest on the show for the first time, and I'm very, very excited to see what he's going to present. So stay tuned for that. The final announcement before we get into this is I'll put a little banner at the top right now that will link you to a video that shows you all the major indicator updates in case you missed that. There's a opportunity to lock in a massive discount for life. This is the final time I'm going to mention it. I did say that yesterday, but I thought it was Friday yesterday. I got a bit confused. So this is really the final time I'm going to mention it. If you haven't seen that, click that little banner thing, go and check the indicator update out and decide if it's for you. I promise I won't mention it again. This little AI algo thing that scans Twitter to find people that make accurate predictions on markets has nominated me as a market profit for XRP. So that's two assets, right? We got the Dixie a while ago and now XRP. Hopefully we can continue to see this kind of thing going on. As a public service announcement, 16 billion login credentials were leaked in the world's largest data breach, including things like Apple, Google, Facebook, Telegram. So if you haven't changed your passwords, probably best to change your passwords. The wife and I spent far longer than I would like to yesterday going through all of our passwords and changing them. Better safe than sorry. Not a tech expert by any means. Not sure if that is actually going to make the biggest difference, but it's probably not going to hurt you to do so, especially if you're in the crypto space, right? I think crypto guys particularly have a lot more to lose than your average Joe does. The Swiss National Bank just cut interest rates by 25 bips to 0%. Okay, so we're back to ZERP in Switzerland. And this prompted me to go and find this chart right here, which shows how restrictive the Fed is relative to the rest of these central banks, right? Swiss National Bank, Bank of Japan, pretty much towards zero, at or near zero. ECB around 2%, BOC not far behind the ECB, and the Bank of England up towards the Fed. Now, there's a bit of a caveat to this because the Bank of England, although it's at higher rates at the moment, has a much higher inflation rate. So I actually don't think the Bank of England's interest rate is very far behind the curve. I actually think this is relatively appropriate for the Bank of England and its current inflation rate. However, the Fed, I still maintain, is massively behind the curve. So this central bank divergence doesn't tend to last for long, right? You can see when one of them starts to hike, the rest soon follow and they all kind of trend up. When one starts to pause, the rest soon follow. And when we start to slash the rates, the rest soon trend down. So they all tend to move together. Granted, there can be a little bit of a lag between them, but given how far some of these central banks are cutting now, it seems only reasonable that the Fed is either going to have to start panic cutting, or again, it kind of fits with that idea that I think they're trying to blow up this financial system. Eventually, they are going to be forced to cut rates and print a bunch, but we've been talking about that all week. But I think this chart right here perfectly illustrates the problem that we are facing at this moment in time. Like I said, I'm pretty sure only the Bank of England can justify these high rates. ECB, obviously feeling the pressure, down at 2%. And then, of course, we've got some at ZERP. So this is pretty crazy, right? It's pretty crazy. Wild times to be alive for sure. As is often the case these days, you can encapsulate the entire scenario in a single meme. So you can say the Fed is too hawkish. You can say the Fed is too dovish. Say it doesn't matter, we're in fiscal dominance now. Or you can invest in a system where there is no Fed. Okay, again, Bitcoin, physical gold are the exits. I'm going to continue to beat that drum until eventually we get to the latter part of this decade and that drum will no longer be effective for anyone to hear. In other news, X is apparently soon going to be launching investing and trading directly within the app. You'll be able to come to X and be able to transact your whole financial life on the platform. X is the future of finance. Kind of speaks to that everything app that Musk has been trying to build for a while. I have always been somewhat skeptical of this because it sounds a lot like, I forget the name of it. Is it WeChat in China? They've got one app that does absolutely everything from government paperwork to banking to social credit scores to social media et al. And of course, the problem with that is centralized control. You tweet something that the government doesn't like and suddenly your social credit score goes down and suddenly you can't shop anywhere and blah, 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 blah. So I've always been pretty skeptical of this kind of thing. And again, I sit here and tell you that Bitcoin and physical gold are the exits to all of this kind of dystopian tyranny that we are facing in the not too distant future. And speaking of Bitcoin, Bitcoin is up nearly 600% since the 2022 bear market low. And this is likely just the beginning if the prior cycles are anything to go by. So don't look at the all-time highs, look at the yearly lows. And that's what's measured here on these orange bar charts, right? Every year, we get significantly higher lows. Of course, occasionally we get these big pullbacks, okay? But ultimately, you can see the trend is very, very clear. yearly higher lows remain intact. And with a little bit of knowledge of cycles, and especially that 4-year cycle, it is entirely possible to get in at the lows, or at least close enough to the lows to call it the lows. I did demonstrate this in the prior 4-year cycle, and I intend to fully demonstrate this again in the upcoming 4-year cycle low next year. Simply Bitcoin here says 150k Bitcoin is coming. Now, is it or isn't it? Okay. Anyone that subscribes to this idea says it's pretty much guaranteed. For a long time, I've been making the case that I don't think correlation is causation in this particular circumstance. I also don't think we should be putting as much weight on this global M2 fractal as many people do. But whether or not it's a direct correlation, whether or not it's a direct result, I don't really think it matters. So long as this cycle low holds, then I think it's entirely reasonable to expect upside, and for that upside to get more and more parabolic as we progress through the second half of this year. And finally, before we get to some charts, a lot of people this year have been saying the bull market feels different, and they're right, it is actually a bit different this time around. In previous cycles, as Bitcoin's price climbed, active addresses surged, and that's because retail were flooding it, right? So retail comes into the market, they have to create new wallet addresses so that they can buy their Bitcoin and hold their Bitcoin in these new wallet addresses. This time around, however, is actually a bit different because active addresses have been declining. And this is simply because there are fewer retail participants this time around. This is also why Google searches for Bitcoin are at the same levels they were during the bear market, or why the timeline feels like an echo chamber so often. Institutional players are taking over, and they move differently. Fewer wallets, larger size, less noise. And this shift isn't just a minor detail, okay? It's a structural change in how the markets move. So you can see here, every time Bitcoin was moving up, okay, so was the orange, which is the number of active addresses. This time around, however, these have been in steady decline. Retail has fully given up, retail has left, and it's largely because people kept promising them this weird alt season idea, which was frankly never on the table, right? If it ever was going to be on the table, it would be in the final blow-off portion of this cycle. So the big question for me is, are they going to come back? If they do, I'm guessing they're going to chase altcoins again. I don't really see a world in which retail come back and try to bid Bitcoin, because I just think they've been priced out of it now. And of course, if you understand Bitcoin, you understand it's divisible, and you understand that you can still get exposure to that. But think about how the retail mind works, right? They have that unit bias. They look at one Bitcoin and say 100k, and they go, I can't afford that. I would much rather have 50 billion, whatever the meme coin tokens are, okay? Just in case it goes to $1, bro, then I'll have 50, right? You know what I mean? Like, that's how they think. But this really does break my heart, because chasing these shiny projects has really destroyed this space. And this has very much become a space for only individuals that are kind of like OGs, right? Or Bitcoin maxis, I guess, or the institutions. And this is undeniably now an institutionally dominated asset class. And it just feels a little bit to me like they knew what they were doing the whole time, right? They're accumulating a bunch of Bitcoin and they're just letting all these unregulated pump and dump altcoins steal everyone's time, attention, and money so that they could focus on the one asset that was always going to succeed. And I think when you speak to most retail participants, you know, not only have they quit, but they're not coming back because their entire perspective of this space is that it's a scam. And for the most part, when you're talking about altcoins, I guess it is, right? But I still maintain this is the exit to the matrix, okay? Whether you're buying now or whether you're going to wait for the 4-year cycle low and then go all in, I still think there's a lot of upside here for Bitcoin in both the short, the medium, and the long term. So the stock market was closed yesterday. We'll see if it's going to open up and finish the week green or red. We know that half cycle low is kind of due to form today or maybe Monday or Tuesday at the latest. So we'll see if we can get a kind of half cycle low and then resumption of the bull trend. I'm not too concerned at this moment in time. For gold, we are still waiting to see if we can confirm a daily cycle low and then a push off. I actually really prefer the shape of this cycle. I know some people were kind of cheering on that we were going to do this into a cycle low and that would give us a better weekly cycle. But the fact we haven't done that and we're probably about to find a daily cycle low and then blast off from here tells me that the underlying momentum is still in this market, and that whole idea of mine with the big blow off top yellow fractal is probably still in play. And Bitcoin, I have to be honest, I think I was starting to talk about this yesterday. This thing really needs to push higher from a cycle perspective. Otherwise, we're going to have to put on a consolidation cycle. Now, I really don't want to do that, obviously, right? Obviously, I want this thing to blast off. But I know how cycles work. Anyone that's bought the PDF or understands cycles or has watched the tutorial in the playlist for free also knows how cycles work. And therefore, we're all very much aware that right now, we're about a quarter of the way through the cycle, okay? So that means we really have run out of excuses not to move higher now. If we're not going to move higher from here, then we are going to end up having to do a consolidation cycle, just like we did back here. Okay, cycle low, fake out failed cycle, timer base low, off we go. Did the same thing in the bear market, cycle low, fake out failed cycle, timer base low, and off we go. You will really, really, really struggle to find, in fact, I can't even think of a single example of a daily cycle that put in a low, traded sideways for half or more, and then blasted higher. Okay, I can't think of a single example where that happens, which tells me that unless this thing's going to get going now, unfortunately, we are going to have to put that consolidation cycle on the table. I know, we all feel the pain, okay? But it is what it is, right? Part of being in the markets is you have to be able to relinquish control and understand that you have no ability to determine where these markets go. And we just have to have a system and see what the market will give. So we're going to keep doing that. There is one bit of silver lining here, and that's that some of these crypto stocks have been blasting off pretty nicely. Coinbase, for example, got a massive big green candle. Looks like it's going to be continuing to push here. The level 3 members know that we've been tracking this fractal very closely. We've been looking for something like this yellow squiggle to play out. We did a whole bunch of dip buying in the longer term accounts during this spill. We also are still holding the core allocation from the lows, and the plan is to really just hold this thing until it pushes to new highs and then look to sell up here and dump the whole lot a bit later in the year. So that's very much still the plan. And as you can see by this big green candle here, it looks an awful lot to me like this is very much in play now for Coinbase. So that's interesting. I hope that this is a leading indicator. I hope that MicroStrategy can finally break this trend line and therefore start to really push higher. If it does, then we can move the stop up, and I'll talk to the members about that as well. Things like Riot, for example, we've got a position on. That looks like breakout, retest, and resumption of the cycle low confirmation. That's where our entry was. So again, if these can start to go, then perhaps that's a sign of what's to come. I also know there's a big account. I don't want to be that trashy guy that throws anyone in front of the bus or whatever, or names, but there's a big account, very big account, that is calling for this to be an ABC, but their Elliott wave skills are non-existent. And as I've often said, right, it's not acceptable to pick and choose a 5-wave impulse and say, oh, here's a 5-wave impulse, without having the full context and the account for the entire big picture. Okay, it's also not okay to just say, well, here's an ABC and like whatever. And one of his ABC comparisons that he does is actually an ABCDE. So anyway, that account I watch because oftentimes he's right for a very long time and then wrong when it matters the most. And the fact that that account is calling for a lower low makes me think that we're almost certainly not going to get one. It also wouldn't fit from the cycle perspective, apart from the fake out failed cycle. But we'll see, right? We'll see. I think a lot of people probably would like one final lower low to enter on. And Bitcoin, as we know probably by now, or we should know by now, has a way of just not giving people exactly what they want, just like it did back here, right? Everyone was waiting to buy a logical retest somewhere in here, and we never got it. We front run the level. Kind of makes me think that's what's coming. But again, objectively speaking, we've already wasted a quarter of the cycle here. So if we start to blast off, fine. But if we continue to trade sideways for a couple more weeks, then by the time we get about halfway through this cycle, I would say there's almost zero probability of moving up until we get to the next cycle low, which unfortunately is all the way in August. So it is what it is. Okay, I think everyone should be cheering on this. Hopefully these crypto stocks are revealing what's coming next. Hopefully this big green candle is going to be visible on the Bitcoin chart soon, as well as for Coinbase. And other than that, have a fantastic weekend. I'm doing a podcast with Uncle Andy over at the What Podcast tomorrow, as well as a deep dive and a members video as well. So look out for all of that stuff. And other than that, God bless, take care, all the best, cheers, bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel